What's up everyone, it's Scotty with Money Investing. Wanted to do a video on Tesla, NIO, SOFI, and Palantir since you guys absolutely love these technical updates on a daily basis. We haven't done one in quite some time, so I figured I'd do an update because Palantir is reporting their earnings next week. So I think it's best that we analyze these companies and of course these stocks, go over the technical analysis because NIO did pull back and then it rallied right back up and then it pulled right back up down once again. And of course, SoFi is coming down after being overbought. Tesla also getting a little bit of that rejection from that 21 EMA. So we got lots to unpack. As always, if you enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. If you're interested in joining and of course getting access to all the buy and sell alerts, options alerts, trade ideas, the first week of the month is the best time to join for you. So we'd love to have you on board. And again, links are going to be down below if you're interested in joining us. So this right here is going to be the expectation for the second quarter for Palantir. So revenues pegged at $530 million, indicating a 12% growth on a year-over-year basis. Yes, 12% is substantially lower compared to what we have seen from Palantir in the past. And the EPS is pegged at around 5 cents per share, which is obviously going to be significant growth on a year-over-year basis at over 600% because the company is turning the corner towards profitability. Now, I also did see a report online, like on Seeking Alpha or something, where there were 3 reasons to be selling Palantir prior to the earnings report. I'll break that down here in just a minute, but again, 5 cents per share, EPS, $533 million in revenue expected, and they are reporting Monday, August 7th. They usually do report pre-market, but on TradingView right now, it does say post-market, so after-market. So we'll kind of take a look at what that actual confirmation is. But most of the times, from what I've heard and from what I've seen, Palantir does report before the market opens, but for some reason, TradingView says after the markets close. But needless to say, this right here was the actual reasonings behind why Palantir should be, quote, sold prior to the earnings coming out. And the biggest reason is to be pessimistic about Palantir going to the second quarter earnings is that while the stock price and the hype surrounding the company's artificial intelligence capabilities seems to be potentially towards rapid growth moving forward, revenues have actually been decelerating. At this point is largely reflective of the point that we just made about management likely unable to give market clear guidance on how AI will reaccelerate the revenue growth in the near future. So basically, the revenue growth obviously has been coming down because they're comping over some very tough numbers. And as I've mentioned before, Palantir is a very B2B business, right? It's a business to business, right? So it is obviously difficult for them to scale at the same rate, at the same level as something like a Google or a Meta Platforms or something like a Tesla, right? Because those companies are very B2C. They're selling to consumers. Consumers are abundant compared to businesses. So that's why for Palantir, it is going to be challenging to keep bringing on new contracts, keep signing up new businesses to their Foundry, to their Gotham, to their other platforms that they offer. Now, artificial intelligence definitely is a big growth driver, but obviously there's a lot of uncertainty around it. So we don't know exactly how Palantir is going to incorporate artificial intelligence and what that's going to do to the business over the long term. What type of growth rates are we going to see? But revenue growth decelerating a little bit, I don't think that's enough of a reason to be obviously letting go of Palantir altogether. Of course, we have to look at the valuation. We have to look at the intrinsic value and where that ends up being. But growth rate decelerating, I mean, every company goes through these cycles of ebbs and flows. So I don't think 12% growth year over year is something to laugh about. I think it's a pretty good growth rate, but it's just the nature of the business, right? Every business goes through these cycles, goes through these seasonalities where we go up and down. So a little bit of deceleration, comping over some tough numbers when it's a business to business company is reasonable. Now, a second reason was Palantir has yet to develop significant economies of scale. Now, another reason to remain highly skeptical of Palantir's long-term value proposition as its current valuation is that it struggled to develop significant economies of scale over time. We do not expect second quarter to change this narrative given that their business model is not fundamentally changed. As the chart below illustrates, Palantir has pretty choppy EBITDA and net income margins since going public, and that's primarily because they've been spending heavily on R&D, research and development, of course, and selling general administrative expenses, right? Ever since going public, obviously, they didn't have a marketing team. They didn't have a team to go out there and start bringing in new clients, new contracts. They didn't really know how to market their product and services to people that can understand what they offer, right? For the longest time, we've kind of faced that issue, but now we're getting to a point where they are starting to turn the corner towards profitability. So there is going to be some net margins. There's going to be very high gross margins, as we already know. Operating margins are also positive because they're turning the corner towards profitability. So their R&D SG&A expense is now starting to play out. It's actually generating more revenue for the company, and of course they are now profitable. So that's, again, very, very important thing. Perhaps the only reason to be very skeptical going into this earnings obviously is that Palantir is overvalued by all metrics: price to earnings, price to sales, enterprise value to EBITDA, whatever you look at it, however you look at it, however you slice it. Palantir is an expensive stock, trading at well over $18 per share. And of course, it has rallied quite a bit from lows of $7, right? So over 182% rally. That's not a small gain, right? 182% since May is a pretty substantial move. And year to date, the stock's up 176%. So of course, valuations have gone out of proportion here because the sales, the revenue, the earnings, everything has not grown at 185%, but the price has. So that's the disproportion there. So that's probably the only valid reason I see why Palantir could be a little bit, could be in the harm's way here going into the earnings next week. So going into the technicals now, this right here is going to be that resistance that we have already been talking about, closer to $19. So that's going to be that resistance. Support level is going to be closer to 1350. So this right here is going to be that level to watch as a support for Palantir. And like I said, if we do see any type of a guidance miss, EPS miss, any type of profitability, expectations not kind of meeting those estimates, I wouldn't be surprised for us to see a breakdown below that 21 EMA and possibly come down to sub 17 levels once again. As you guys already know, my fair value, my intrinsic value is still going to be sub 10. Of course, again, I want good deals, and that's really where we are, what we're watching for Palantir. But resistance is going to be $19 all the way up to 26. And of course, we got that support right over here, sitting roughly at 13.75 for this company as well. Now going over and moving over to NIO, and NIO has perfectly played out really well from an analysis standpoint. As I mentioned, that these pullbacks, these drawdowns, these sell-offs are very normal, very healthy in a market environment. And you can see that we have already been very, very overbought. Then we did see NIO kind of drop a little bit over 10, 11%, and then it rallied right back up yesterday, up over 6%. And of course, today it's down once again. So we have, for the most part, been filling this entire gap, as I pointed out in my couple videos ago. We still have maybe a little bit more upside up to $16.95, $17, but the high for the day was already at over $16. So we are certainly overbought, no doubt. We're coming up to that resistance where if you take a look at the overall context of this chart, let me just go ahead and remove a lot of these moving averages. They can be a little confusing. But if you remove everything and then just look at the weekly chart here, you'll notice that we are coming up to that lower high. This is the lower high that I'm referring to. That's the resistance, kind of in line with the previous times. Every time we've got up to that level, we got rejected and then we sold right back down. So, we're already getting up to $16, $17. Is there more upside? Maybe. I mean, it could get up to like $16.95, $17. That's about as high as I could see it go, like in the near term, like in the resistance standpoint. But of course, support level is going to be $13.75 all the way down to $10.61, right? Those are going to be some levels to watch for NIO. It's also seen a very strong rally similar to Palantir since June. NIO is up 128%, year to date, it's up a little bit over 44%. So they're doing really well. Lots of volume driving this move higher. But at some point, we have to ask ourselves, how much more upside does this stock really have? And to answer that question, marginally, not a lot, versus the potential risk that it now carries from a technical standpoint. So support level is going to stay put down to 13.75, down to as low as 10.61 for NIO. Moving over to SOFI. SOFI also seeing a little bit of a pullback here after, again, a very strong rally after the earnings came out. And it's now starting to break back down below $10. $9.50 is where it's at. So starting to break down below this level right here. We'll go ahead and turn this level back into a resistance, and support level is going to be down to 8.64, 8.65 for SOFI moving forward. So this right here is going to be that level to watch for SOFI. And of course, resistance is going to stay put at closer to $10 per share for this company. And last but not least, we got Tesla. And SoFi also does have that student loan resumption, right? So the payments are coming back. So that is going to be very good for refinancing activity for SoFi. But for Tesla, support level is going to stay put roughly down to 240, 241. So this right here is going to be that level. And I've mentioned this before. I would not be surprised if Tesla actually does end up in the 240s very soon here. That's a very strong area of support. It's a good area of demand. Even as low as 220s. Is a possibility for Tesla, and resistance is going to stay put at 275 to as much as 312. I think it's going to take some time for us to get back up to that level because Wall Street is a little bit skeptical with the margins and the price cuts, and of course the volume deliveries still increasing, but at the expense of profitability. So I think that's something that's going to be a bit of a headwind for Tesla over the foreseeable future. But support level still is going to stay put at roughly 240s, down to 220s, resistance up to 275 to as much as 312 for this company. Still long-term bullish, but I do have covered calls that are now printing considering that Tesla is selling off. So hope you guys enjoyed this video and a complete update on these 4 stocks. Let me know your thoughts down in the comment section below. And I know from a time allocation standpoint, we do allocate more time to certain stocks than others. It's just a matter of, what's going on with those companies. So since Palantir is reporting earnings next week, we definitely did cover Palantir more than Tesla or SOFI. But again, when they do report earnings or where there's company specific news, we'll spend more time on them versus others. So hope you guys understand that, and make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.